It's Conduit News Radio with Paul Harrell.
Hello, hello, hello. Welcome, folks. It's hour number 2. Thank you so much for being with us. We are days away from the midterm elections, and I know everybody out there is calling your friends, telling them that they need to vote, especially if they live in other states. I have not voted yet, Joe. No, I have not, but I do plan on it. Folks, this is the intersection of conservative ideas and reality. We are building a liberty machine. We're so glad that you're with us this morning. I want to welcome to the program. On the line, we've got Dr. Michael Pakko, who is an economist, state economic forecaster for the University of Arkansas at Little Rock. Dr. Pakko, thank you so much for joining us this morning.
Oh, good morning. Thank you for inviting me.
Absolutely. I saw some of these unemployment numbers for the state and for the country, and I just wanted to get your response to that. Just kind of talk a little bit about the state jobless rate. It's hit this record low of 3.5%. What does that tell you?
3.5% is the lowest that's ever been recorded since these statistics were put together in the 1970s. So what it tells us is that of the people who are either looking for a job or have a job, the number looking for a job is very low. But as a ratio like that, it's not necessarily the best indicator of either the economy or even of labor market conditions for that matter.
So, so talk a little bit about that, because are you saying that the number of 3.5% record low unemployment, it might sound great, but it might be just a little bit misleading as to the health of the overall economy?
And that's exactly what I'm saying. And the reason is that the number of people who are even participating in the labor force has fallen dramatically, since the last recession, but even more recently here in Arkansas around 2012. The labor force participation rate, the number of people that are either actively looking for jobs or have a job, declined by, about 4 percentage points nationwide from the time just before the Great Recession till recently. Meanwhile, Arkansas's participation rate has fallen by almost 6 percentage points. So that's 2 to 3 percentage points more than the U.S., and that's as a fraction of the population. Those are people who have simply dropped out of the labor force, have disappeared, aren't even looking for a job anymore. And if we consider those people to be, to some extent, unemployed, then the measured unemployment rate would be quite a bit higher than the 3.5% that we're seeing today.
Okay, so you mentioned that our labor force participation rate in Arkansas is lower than the average across the country. Is that true, too?
Yes, that's right. It's one of the lowest in the country, and it's fallen by more than almost any other state in the country. That is, it's getting worse in the sense that fewer Arkansans are looking for a job or employed.
Well, this may be, I know this may be, speculative, but do you know why that is? Why in your opinion, would Arkansas be different than these other states?
Well, that's a really good question. Some of the other states that have had similar experiences are in some ways share the same characteristics as Arkansas, relatively low-income states. When I look at the breakdown by age group, nearly every age group experienced the decline during the 2012, 2013 period. But the big gap that opened up and hasn't closed at all is in 55 to 64-year-olds. So people who are approaching the end of their working careers, if you take the 65-year-old traditional retirement age, have dropped out of the labor force, and it doesn't look like they're coming back, having taken early retirement, disability, perhaps something like that. There's also a big decline in young people no longer working or participating in the labor force. That's probably attributable to more going back to school or staying in school, or maybe more intensive school studies, less time for a part-time job. And then early middle age, 35 to 45, we're again seeing a decline where we've seen some recovery, but a lot of people have dropped out of the labor force from that age group, and that's kind of mysterious as well. I guess when you look across the board, it could be things like the decline of manufacturing jobs. People are choosing to not work or retire. There's some speculation that that the opioid epidemic is keeping some people out of the workforce.
Interesting.
But that's all speculative, really.
Yeah.
There aren't really any hard and fast reasons other than the fact that baby boomers are retiring. So a little bit of decline in that participation rate is natural and to be expected.
Are you concerned at all with Arkansas? I mean, I've been saying we've got a skilled labor, shortage here in the state. I mean, if you talk to some of these businesses, they really have jobs that they need filled. But in Arkansas, we tend to have a skilled labor. I've called it a crisis before, but feel free to respond to that.
Well, there is a mismatch, and the things I hear traveling around the state, talking to employers, Chamber of Commerce people, is it's particularly acute in the skilled trades, jobs that don't necessarily require a bachelor's degree, but require some training, expertise, and skills. Truck driving has been one for a long time that's been lacking workers. Welding, there's some other areas like that. But I guess the good news is that we are seeing this increase in the number of young people that are staying in education longer, so getting those skills. And so I think we're on our way to meeting that, but it is an area for improvement, that's for sure.
We're talking with Dr. Michael Pakko, economist at UALR. I've got this headline in front of me. Okay, we've just talked about this. State jobless rate hits a record low. We talked about how the labor force participation rate, though, is also low, and that's not a good thing. But then I've got another headline here with the same number, 3.5%, but it's about the GDP overall in the nation's economy. Headline economic growth still sturdy at 3.5%. So what's your take on the GDP gains that the nation has seen so far?
It seems to be driven primarily by consumer spending, confidence among consumers, and a little bit of extra cash in their wallets from the recent tax cuts at the federal level. There's also a little bit of inventory rebuilding that went on in the third quarter. But nevertheless, we're seeing a phase of pretty strong growth nationwide. The data aren't really available for Arkansas yet. The latest information we have on GDP for the state is that we experienced zero growth in the first quarter of the year. We won't find out how the second quarter turned out for another couple weeks here. And that number might be revised upward. But that's one of the areas, if you're looking at the overall production of goods and services in the Arkansas economy, where we're lagging behind the nation quite a bit.
So we're lagging behind in gross domestic product and GDP. Yeah, well, and we would hope that would obviously pick up. I mean, I think Arkansans, just from what I can tell, that we're appreciative of the more money in our pockets. The Trump tax cuts and everything else. But yeah, I mean, we want to grow economically. Now, for me, Dr. Pakko, one of the reasons I want to see the states the state grow economically, in the private sector, is because I'm a limited government guy. And if we can hold government essentially at the same size, and then the economy grows, technically government has gotten smaller, and I think that would be a good thing.
Well, yes, I would tend to agree with you. The private sector is where the value is added to the economy, particularly in terms of the things that we export, manufactured goods, agricultural products, things like that. Then that all ripples through the economy with higher incomes and spending. Mm-hmm.
Let me ask you this, and this may be a little controversial. I think what the president is doing with China is long overdue, and I know there are different opinions on that. But how's that? How do you see that? I mean, hurting our farmers. I mean, a lot of farmers are saying, we're happy that the federal government is now putting some kind of program in place, to kind of subsidize what the losses could be, with soybeans and that sort of thing. What are your thoughts on that?
Well, as an economist, I'm thoroughly trained in the value of free trade, and it concerns me whenever there's hints of a trade war, imposition of tariffs, either by us or our trading partners. It's just a step in the wrong direction. People are made better off when they're able to trade freely. Now, some of things that are going on might be strategic in nature, and if they pass, that's fine. But it does concern me, and it should concern Arkansans, because we do have a robust export market, particularly for our agricultural goods. And to some extent, it seems one of those crazy kind of government plans that we're going to tax incoming goods, start a trade war that'll hurt our farmers. Then we need to subsidize the farmers for the pain they're experiencing, and that's certainly not a good situation. Certainly not if it persists. If it's temporary, okay, well, we'll get through it. But
and I think that's what a lot of people are hoping, that this is temporary. When you do have the export, I think it's like $40 billion. I think $80 billion industry, but half of that I think is the export side of the soybeans. And then you got that now, and this is the number that they throw out. Well, you don't really see it printed next to each other very much, but the $600 billion of intellectual property theft by China against the United States. And so, what I would just say is there's a ton of information. As somebody who follows the news, there's a ton of information that's now being brought to light that I wasn't even aware of about, the intricacies of global trade. And I know trade is complicated, and I know trade is tough. But I'm like you, Dr. Pakko. I hope it is temporary, and so obviously the farmers get some relief eventually.
Well, yes, and when it really comes right down to it, trade is about being able to buy the goods and services we desire at the lowest possible cost. Countries engage in trade to produce the goods that they're good at producing, and exchange them for things that they want. And so it's really all about consumption, not production. And so often these trade negotiations are cast in terms of creating jobs and creating export markets, when really it should be the other way around. How can we get cheap goods for American consumers?
Dr. Michael Pakko, I appreciate you coming on the program so much. Very enlightening, great information, great analysis, and I hope you have a great day.
Well, thank you very much. Thank you for having me on.
All righty. Folks, we're going to take a break. That's Dr. Michael Pakko, an economist with the UALR. You see him quoted in this recent story here from last week about the state jobless rate hitting a record low of 3.5%. But then if you dig between the lines there, you find out about our labor participation rate, or labor force participation rate. Really good information to kind of see, where we really are economically, where we need to get, where we need to go. I think is really the positive to take from here, is that, hey, at least we know the facts, we have them now. We can try to improve upon our circumstances and our conditions.